Welcome to the Fear and Greed, the week ahead. This is where we take a look at the big events, reports and releases coming up this week that give insight into the economy and a look back at what happened last week too. I'm Sean Aylmer, and every Monday I'm joined for the week ahead by economist Stephen Koukoulas. You'll find him at thekook.com and on Twitter using the handle thekook. Stephen, last week, retail trade, job vacancies, RBA credit data, there was a fair bit going on, core logic house prices, of course. The economy seems to be in a slightly a holding pattern, really, while people are wondering about inflation and wondering about offshore pressures and exactly what's going on.
Indeed. I think that's a nice summary of what we're seeing because some of the numbers were a bit weaker. Not surprisingly that job ads were down in the 3 months to August. I think that was the reporting period for them. And again, of course, with lockdowns, firms aren't rushing to hire people. Having said that, though, they're only down a bit. The level is still well above where we were this time last year. So it says to me that when we do get over these lockdowns and that we sort of open up the domestic and international borders, the economy is going to be doing well. Retail sales were down as expected, same reasons, but things like building approvals and housing credit were up. House prices are up. So this housing side of the economy is one that's really putting a real bit of momentum into the recovery that's going to be coming. The big question is, will it continue? And of course, we've got a discussion emerging quite intensively last week that the regulators might want to just sort of crack down on some of the ease in credit and ease at which people can get access to credit, which of course would dampen house prices. So, it's the housing market looking good for now, but will it continue?
The other numbers we got out last week was the final budget outcomes for 2020-2021, the last financial year. And the bottom line was $80 billion better or something. I suppose it just means it's a better starting point for this year.
Yes, it came in at $134 billion for the financial year 2021. 80-odd billion lower than was budgeted for when the budget was initially handed down. And the reasons that were a couple. The economy performed better than expected. The labour market was much better. And of course, the labour market is really powerful in terms of its impact on the bottom line. If you're not paying, for example, unemployment benefits and you're collecting more income tax, that's one reason. And if the economy's stronger, people spend more. So there was a lot of extra excise coming through. And the big one, of course, was company profits with this staggeringly strong iron ore price over the last 12 months and other commodities too, and other businesses. We're seeing that in the ASX right now that, the business sector was doing well, making profits, and when they make a profit, they pay company tax. So the improvement in the budget was there. Of course, it'll take a bit of a hit with the current financial year. These lockdowns now are in 21-22 financial year. So we have to wait till the mid-year update on the budget in the middle of December to see just whether that improvement or the narrowing in the budget deficit's continuing.
Well, that's last week. We'll be back in a moment and get into the week ahead. I'm with economist Stephen Koukoulas, a.k.a. The Kook. Stephen, it's a big week for the central bank, for the Reserve Bank.
A huge week, yes. We've got the board meeting tomorrow. Not a lot expected. I think, as we were just discussing prior to the break, that the RBA is, like all of us, just wanting to see how the economy gets out of this downturn. We know that the September quarter GDP numbers are weak. We know the labour market numbers that have been reported are all over the place. 0 hours worked by many people who still have a job. So there's that quirk in the numbers that just needs to be ironed out of the data. And I think the RBA is just going to simply say they've got optimism about a recovery when the lockdowns end. They've got optimism that the labour market will continue to tighten and they'll do nothing on policy. So I think the easiest forecast I've had in many a long day is that, cash rates unchanged, the other QE sort of measures, the bond buying will be unchanged, and they'll just probably just update their assessment that they've got optimism that the recovery is coming through. And as we were just discussing too, they may spend an extra paragraph or two looking at the housing market because that is something that's clearly moving into the middle of their radar. Are we having an element or a risk of financial instability from this incredible growth in credit, this incredible growth in house prices?
Beautiful segue into the Reserve Bank's Financial Stability Report, which also comes out late this week.
Yes, later this week, every 6 months, the RBA does produce a financial stability report. And of course, arguably, depending where we are in the economic cycle, that can be one of the most interesting things that the RBA produces because it does look at the health of the banks, Are they lending recklessly, or is there any evidence of loan arrears and bad debts and that sort of poison that we hate to see in the banking sector? Also looks at insurance companies, what's happening to the household sector. We know that the household sector's got very high levels of debt at the moment. We're borrowing lots to buy houses predominantly. And they examine some of the more esoteric sides of the banking system and the insurance sector and the like to see whether they can detect any greater risk of financial instability looming. Because if that is the case, then, of course, they've got to mitigate against that risk. So the financial stability report will be something that on Friday this week will be sort of trawled over for any bits of information that suggest that there's any concerns. At the moment, I don't think there are. The banking reporting shows that bad debts and loan arrears are still very, very low, but maybe the RBA can sort of scratch the surface of some of those numbers to see whether there's anything underlying some of the financial stability that's there.
Another interesting one this week will be international trade. Is it too early to see those change in commodity prices, particularly iron ore, come through?
Yeah, look, a little early to see that. Look, we're looking for another massive surplus. Gosh, once you start getting $10, $11, $12 billion surpluses per month, the odd billion here or there, it's a bit hard to forecast. But look, I think it is still a little early. Volumes have just come off a little bit too, but don't forget we've also had this incredible lift in natural gas and coal prices. Again, it might be early to have that offset. So there are so many moving parts on this international trade number that the export revenue is going to be strong. The import side is probably going to be a little bit weak because imports are sort of being held back by the current lockdown. So as we were just discussing, we consumers aren't spending as much, and perhaps some of the investment decisions which require machinery and equipment, which is predominantly imported, are being postponed. But look, another big surplus is on the cards. Whether it's 10 or 12 billion, it doesn't really matter. But we're getting a real boost to our economy from the export sector.
Enjoy your week, Stephen.
Thank you, Sean.
That was economist Stephen Koukoulas, better known as The Kouk. You can find him at thekouk.com and follow him on Twitter using the handle The Kouk. I'm Sean Aylmer, and this is Fear and Greed, the week ahead.